asset allocation is, of course, a huge factor into why people invest. You may be more aggressive or conservative on certain accounts for various reasons. Maybe you're getting closer to retirement and need to draw upon the account, and you're in a place where a conservative portfolio makes more sense. I mean, there's a myriad of reasons, and it's personal to everyone. But at least having a fundamental understanding of why you and your advisor agreed that you'd be invested in a certain way uh, should help you feel more comfortable if a change needs to arise.
Hello, Apriem family, and welcome to episode 13 of Apriem Financial Cents. In this episode, I sit with certified financial planner Megan Schwab, and she shares with us some of the key highlights of a recent presentation that she gave at WOW, which was a Women of Wisdom event that we just did down here in Irvine. I hope you enjoy.
Thanks, Josh. Yeah, so the focus of that event really was just talking about how important it is to know what you have, not just necessarily in your bank account, but important documents, information about who your doctors are, and just compiling everything and keeping it in one central place, mainly so that when the unexpected happens, you're prepared and you can focus on whatever that event is and not worry about the minor details of contacting your banks or doctors. But having that information in place so that you feel empowered to make decisions confidently, especially in situations that may be out of your control or not ideal.
That leans a little bit into kind of like where your assets are held, right?
Yeah, exactly. So, just keeping a list of all the banks and institutions where you have accounts, perhaps including account numbers and maybe a phone number of the advisor you work with, or just the bank's general line.
All right. Well, then what about the importance of the different types of accounts that you hold at these different locations? Does that play a role in any of this?
Yes, there's really two main reasons why you want to keep track of the types of accounts you have. One, and I think most importantly, is so you know the rules of each account. So, for example, if you have a traditional IRA, knowing what the required minimum distribution age is for you, and then working with your advisor to figure out when do you have to pull that money annually, how much is it? Because there's some different strategies that could be deployed to help you be more tax efficient, or if you're charitably inclined, to help with those ventures. So really from a tax perspective, knowing the types of accounts you have is very helpful. But then getting back to the whole topic of organization, you may find that you have several of the same type of account for no apparent reason. So just
Hmm.
consolidating and making things simpler is another reason why you want to at least take an inventory of what you have, and why you have it, because it may allow you to simplify things a bit. And then
Sure.
lastly, too, it's almost tax time, so it's on everyone's mind. But just allowing you to have a good idea of where you could expect your tax forms to come from.
Yeah, well, and especially with everything becoming more and more digital these days, I think we're finding that more and more organizations send 1099s digitally and aren't necessarily mailing them out anymore.
Exactly. So just keeping track of that because it gets a little overwhelming for sure.
Yeah. Okay, I can see that, and I could also see how, kind of dependent upon where you're at in your life, those different types of accounts could be really, really important, right? Am I contributing for retirement, or am I saving for some kind of short-term goal or need at the same time? And then what kind of tax treatment am I getting out of that? Okay, and when we talk about these different types of accounts, there's different ways that we can have those dollars invested or working for us. You want to talk a little bit about how that kind of plays a part in knowing our assets?
Sure. So asset allocation is, of course, a huge factor into why people invest. You may be more aggressive or conservative on certain accounts for various reasons. Maybe you're getting closer to retirement and need to draw upon the account, and you're in a place where a conservative portfolio makes more sense. I mean, there's a myriad of reasons, and it's personal to everyone. But at least having a fundamental understanding of why you and your advisor agreed that you'd be invested in a certain way uh, should help you feel more comfortable if a change needs to arise. So, an example I used is when my husband and I were talking about starting a family. We had a discussion about increasing our emergency fund because there's going to be a third member of our house. So for a time, we really focused on saving or allocating to cash instead of our investments as we normally would. And because of that conversation, we established a goal and a purpose. And then once we hit that, we were able to go back to our kind of regularly scheduled situation. So whatever the reason, it's just good to know the why behind what you have and what you do.
And so, I mean, you brought up your spouse. What about knowing kind of their accounts? Is that an important kind of piece of the puzzle as well?
Yeah, so really with that, if just knowing at least the accounts they have, if you choose in your household to hold things separately, that's useful to know. But more importantly, their retirement accounts. Are
Hmm.
they still actively working and contributing to an employer-sponsored retirement account? Have they retired and just have that retirement account on the side? Is really important to know. And if you are married legally, you're supposed to be listed as the beneficiary on your spouse's retirement account.
That's a good point.
So if you're not, you usually have to sign a form saying that you acknowledge that you're giving up the right to be the beneficiary. And I think that's really important to know too, especially in unfortunate circumstances that arise, whether it's death or
Yeah,
divorce,
yeah,
anything in between.
yeah.
Just knowing your rights on the account and that you know you do have a right to that account if something was going to happen.
There's a question that comes up pretty often, so I think it's probably worth addressing, and that is, what if your spouse, let's say, is not working, but we want to contribute for their retirement? Are we allowed to contribute on behalf of our spouse if they don't have working income? No, it's an easy one, but it comes up pretty often.
Yeah, so you actually are. It's what's called a spousal IRA or a spousal individual retirement account. And that contribution limit changes every single year. So for 2024, it's $7,000 with a $1,000 catch up contribution if you're over the age of 50. And so the working spouse can contribute to that account on your behalf if you're not working. And so that's a way of storing things away for retirement as well if you don't actively have earned income.
What about life changes and things that if our circumstances change in our life, how does
Mm.
that kind of play into the importance of knowing where our assets are at?
Sure. So I kind of touched on two of the bigger ones that happen, death and divorce. So
Hmm.
with divorce specifically, just again understanding what accounts you have, are they held jointly, and then knowing your state's laws around divorce. Each state is a little bit different, so just being aware. And that being said, each divorce is different, so it's not going to play out the same way for everyone how the funds are split. But just having a general understanding of how your state works when
Hmm.
it comes to those proceedings is just very helpful in a time when I'm sure there's a lot more questions than answers.
So oftentimes when talking about things like divorce, there's what's called a quadro. We hear about this, it comes up. Do you want to explain a little bit about what a quadro actually is?
So going back to the rights on your spouse's retirement account, a quadro, it stands for a qualified domestic relations order. So it's a judgment given by the law saying that this individual needs to pay out child support, alimony, or any other type of spousal support from that retirement account. So there are situations where the non-working spouse, after a divorce, ends up with half of the retirement account that was in their ex's name,
Sure.
just based on how the proceedings went. But that's usually how it works.
So as an example, if I had a 401k, right, and let's just say my wife and I weren't divorced, and I took half of that 401k and I gave it to her, that would all then be taxable. And I'm under 59 and a half years old, so we'd also get hit with a 10% penalty tax for doing that. However, if we were to get divorced and the judge um, orders a quadro, I can then, through using that quadro, give her half of my 401k, and she can receive that as a not tax free, but tax deferred. It would be a non taxable event. She effectively would get those dollars, but then she would pay taxes on it if she took withdrawals off of it. Am I understanding that properly?
Exactly. It would work as if it was her own retirement account from the beginning.
So what about how life insurance and trusts play a role in our understanding of our assets?
Yeah. So, of course, trust is what allows you to pass assets on to family, friends, whoever it is, without going through probate, and it's also where you can list your last wishes. Trusts are very important to have, especially when you have young kids. It allows you to uh, determine who would take care of them in the event something happened to you and or your spouse. You can choose to name a healthcare directive if you are unable to make your own healthcare decisions. And it's really important to review that at least annually, but really go through it every 3 to 5 years. Some common reasons that, or one of the most common reasons someone would update their trust is as their kids get older. The stipulations you have around your kids and the money that they would inherit is very different when they're 10 versus when they're in their 30s. That's just something good to keep in mind, and you can really personalize your trust and how you want your beneficiaries to inherit money. So we've seen it all. We've seen, people say, "I my kids can have this money free and clear of any trust once they've completed a 4-year degree. Maybe they get a third of the assets upon turning 25, the next third upon turning 30, and then the last third at 40." So there's all sorts of ways you can kind of control how they access the money even after you're gone, which isn't necessarily a bad thing, even if they are responsible, right? It's just helping to set them up for success with maybe more money than they're used to having at one time.
Yeah.
And then similarly with the life insurance, just reviewing beneficiaries on those documents as well. As the owner of a life insurance policy, you can change the beneficiaries while you're still alive. And perhaps you found yourself in a situation where you need to do that. Otherwise, just really understanding, is this a term insurance policy or is it a whole or universal life policy? Do I need to keep these active for any reason? What are the penalties or fees if I chose to surrender the policy? And those are all things that our team can help you figure out. But just good to kind of keep an eye on that because the decisions we make 10 years ago may not be relevant anymore.
Yeah, I think one of the things you mentioned is universal life insurance policies. So you've got term
Mhm.
insurance policies, right? Those are pretty straightforward. And once we hit the end of the term, they end, right? The term ends, it goes away. Sometimes there's an option to extend or continue it depending upon the company that you're with. But universal life insurance, it's important to review those probably every 5 to 7 years or so because the premiums that you pay on those are flexible and they can accumulate cash inside of the policy. But as those cost of insurance charges go against it, if the cash inside the policy doesn't perform over time, it's possible that that life insurance could actually expire sooner than you would think. They call it lapse. The policy lapses, and it could require you to pay more into it. So I think that's a really, really good one to highlight and talk about. Talk about the importance of reviewing that type of a policy, whether it's guaranteed universal life or variable universal life or index universal life. Those are all important to review just to make sure that they're performing healthy and they're not all of a sudden gonna lapse on you out of nowhere when you weren't expecting it. And then the insurance company goes, hey, your life insurance policy is gonna end unless you put in an extra X amount of dollars, which sometimes can be very, very large. Okay, and then I know that on your kind of list of topics you went through, you talked a little bit about commingling funds. What was that all about?
Sure. So again, California is a community property state, so that means any money acquired during the marriage is considered to be equally the both spouses. If I bought a car or acquired assets prior to my marriage, it would still be considered my own personal money or assets, even after I get married, unless I choose to name it jointly or in the name of our joint trust. An exception to this rule is if you received a gift or inheritance while you're married, that's considered your own separate property, again, unless you put it into a joint account or a joint trust. And I think that's really something that's good to know, even if you are a family who does combine all of your assets, just understanding that because you inherit something while you're married, it doesn't automatically make it your spouse's too. And there's reasons why people may not want to commingle funds. It could be to ensure that their bloodline is the one that continues to inherit the assets after you pass on, and things of that nature. So just know that that's always an option for you. And at least at Apriem, we make it a point to talk to the individual that inherited the funds about their options, and what they want to do with it before we bring everyone else into the conversation. Because we want that individual to feel comfortable with the decision they made and not feel pressured in any way, to do something that they may otherwise not do with their inheritance. So just because you choose not to go commingle funds with your spouse doesn't necessarily mean there's problems or anything wrong is going on. You're just ensuring that the money is protected for the next generation, that it's following the bloodline.
I think this is all really helpful. So if we spend the time, we go through, we gather all of this information, we've got a good understanding of where we're at. Do you have any suggestions on how to store this type of information, and also making sure it's available if something were to happen to me? How do I make sure that my wife has access to this information that maybe I know and understand, but maybe she didn't take the time to have it, or vice versa?
Sure. So, yes, you should certainly keep all of this information. Either if you're a hard copy person, keep it in a binder in your safe, or find a secure digital way to save it in a file, or a secure vault of some sort. But also appointing a trusted contact to know where that information is kept and the password to get into that information. Uh, just in case something happens, because that information is going to do you no good if you're the only one who knows where it is.